Hello, my name is Wasku Smart. Welcome to our YouTube channel. Don't forget to like, share, and subscribe. Thank you.
Hello trader, my name is Wasku Smart. So for today, we'll be talking about the principle of fair value gap. So which means that we are starting a new series on our YouTube channel, and what we want to discuss is we want to look at the principle of a fair value gap. If you have noticed most of my trading patterns or most of my trading techniques, you will have noticed that I use fair value gap a lot and I reference fair value gap a lot. Even if you are in my um, Telegram channel, you will see that whenever I see a fair value gap, I'm always happy. I love trading using fair value gap more than other block. Okay, let me give you a little introduction on fair value gap, which also called the FVG, like short form FVG. The little introduction of fair value gap is that fair value gap is introduced by the ICT, the inner cycle trader. The idea of fair value gap was brought by the man called Michael Addison. Yeah, I think Addison, yeah. And he is the founder of the inner cycle trader. The idea of fair value gap was brought by him. He introduced the idea of fair value gap. The idea of fair value gap is that there will usually be a trading momentum from a particular place. And the idea is that whenever a candle traded and they let a particular price zone untraded, when okay, let's say for example now, look at the screen now. Okay, let's look at this whole consolidation here. I want to show you something particular. This whole consolidation that is here, you can see that when this candlestick comes up, the whole candlestick goes up, and like there is always um a trade off zone and a trade back zone from every price zone. So you can see like there's kind of, you can see here now you have a gap. No, you can see, so what the gap is all about, or the idea of the gap is that market was so quick in that particular zone or in that particular price level. So which means that when market is so quick in a particular price level without any order being taken or without any order being put into consideration in that price level, we usually see a high probability of market coming back into that same particular zone and reacting. So let me put it in a reacting way. I can say reacting because if I say trading off, it can be because you can't just see the gap alone and trade it. So that's why I said principle of a fair value gap due to my knowledge, because I've been using it since the time I meant ICT. I learned its concept, or I watched some of his video. I've been learning fair value gap on my own also. Like I've been seeing some things that work for me also, like things that I can actually hold on to. So most time is not, you see, the mistake some of the ICT students usually do is that they usually trade fair value gap as fair value gap alone. So you don't know that it's just it's not a strategy. It's just part of the concept that can be used to implement your own strategy. It can't stand alone, but it can be used to complete a formula that can give you a strategy. That is what a fair value gap is all about. So in this series, I will be bringing out every ideas, every knowledge I have about fair value gap. Why you always see it on my charts in my Telegram channel, where I usually focus on it like, oh, market is going to buy here, market is going to sell here. I'm going to show it all on this series. So the best thing I want you all to do is just like, share, and subscribe. And whenever I drop a video on this series, or whenever I drop any videos, just make sure you comment. Your comments is actually very, very important. So let's get into the business. So first thing you have to do is we have to first talk about the formation of fair value gap. So which means that this video is just the introduction of the principle of fair value gap. So let's talk about the formation of fair value gap. In a very few seconds. Okay, let me close this. Okay, thank you. So let's talk about the formation of the fair value gap. So let's say we have market being bullish and we have these candlesticks. Market traded this candle. Okay, let me pause. So we have market is bullish. Market traded off a candle first. So which means this candle green. Okay, and this also green. So we can see high trading momentum from the market. Market is trading high momentum when the new open of a new candlestick will come up. You see the new open of a new candlestick comes up at the very ends of the closing of the previous candle. So which means that it left us with a little choice, or it left us with a little trading momentum. You can see from this zone here to this place here, you can see that there is a little the only thing we saw there, the only price consolidation or pricing of the market that we saw there is just bullish. The only thing we saw inside, okay, let me try and put it. Okay, the only thing we saw inside this level is just bullish. There is only a buyer at that particular zone. I hope you understand what I'm trying to point out. Just trying to give you the ideology of fair value gap. So if you understand the ideology of fair value gap, there is a way you can trade it and you have faith in what you are trading because you understand the ideas that backs it up. It's not just the pattern. Forget about the pattern. You are trading ideas. You are trading what you believe. Your believing is what you are trading in the market. If you can sleep when your order is opened, it shows the level of your faith in your strategy, in your market ideas. So forget about the pattern now. Let's focus on the ideas. So this is the idea here. I'm using these three candlesticks to make an explanation of fair value gap onto us. You can see it here now. Market was bullish. You can see three candle was bullish, but you can see this 1, 2, 3. But at this particular level, we have a gap. But what happens at the gap is what I want to explain now. You can see that the only when you're looking at the forex market, when you're looking at the charts, just remember the two things that is occurring there is buy and sell. There's a buyer, there's a seller. That's all. That's the only way market makers make money. Is just buy and sell. But there are principles, their psychological levels, their strategy, there are a lot of things that back the buying and the selling to occur. So just focus on the buying and the selling alone. Just work like a normal business guide. Forget about the technical stuff. Forget about complicating it now. So there's a buying and there's a selling. But at this particular point, let's assume that we have a okay. Let me put this. Okay, let's assume that we have this guy here. So market kind of market kind of weak itself. Now, when weak happens, if you go down to a lower time frame, what occurs there is that market sell, like there's a sell order, there's a buy order. Like market was trying, the seller was trying to force market down, and the buyer was like, no, like putting high momentum. That's what occurs at weeks. That's what makes weeks to occur. Hope you understand. So at this particular level here that we have here, if we have a week here, which means that at this particular price level, there's a selling and there's a buyer. Somebody bought it, somebody sell it. But if we have a fast buying momentum, it makes that there's the high or the market makers or the smart money or the important people in the market. They are the ones that put the trade, the hedge funds. So which means that those are the people that can move market to goals in a very high momentum now. So if you have something like this now, what it means is that there is somebody that has a very huge amount of money that moves market. So what lets fair value gap to occur, or something they call imbalance, is that at this particular moment here, at this zone from here to here, there is no transaction of selling. No transaction of selling. If you go to lower time frame, you are going to see a whole just buying, buying, buying. So there must be a balancing in the market. Hope you understand. There must be a balancing in the market. So there must be a balancing in the market. So that is why the idea of fair value gap or the imbalance. So when there is an imbalance, it means that the market structure or the market order flow has been closed onto one-sided. So which means that there is only a buying. And don't forget, the market is just like the normal market you buy, that the normal market of reality, just a normal reality. So which means that if there is someone that is buying it, then what is the point of buying? Then it means that the person wants sellers to come in, the person want to sell it, or the person want to sell it to make a gain. So at this particular zone or price level from this year to year, there is no selling moment. So means that the person buys or the person forces the market to go up with his own willing money or with his own willing funds. So which means that there is high probability that market is going to come back to that zone, not just to close it, but to trade inside it. So like it is an imbalance, so which means that at that particular zone, market is imbalanced. I hope you understand. So if the market is imbalanced, then there needs to be some hedge funds or some market makers that needs to come back to balance that place. So if there is always just a buyer at that particular zone without a seller, then it means that the person that bought there is actually still holding his money or is still having that transaction with him. So there must be each transaction in every price level. So means that there must be a buyer and a seller. Someone must buy it, somebody must sell it. Oh, okay, okay. I hope you guys are familiar with cryptocurrency now. If you go to Binance and you check their order list or their order flows, you see the buying and the selling order flows. So which means that as somebody is placing a price for buy, there is somebody at the other end selling it. That's just for cryptocurrency other way, but this is kind of different because of the market makers. They decide what happen. They decide what, because this is talking about the economy of a whole nation. Sure, I hope you understand. So that is just the idea of fair value gap. So which means that we have confidence based on the fact that we know the market can come back and trade inside it. So every time I see a fair value gap, based on my own understanding, it is actually minted with some other market structures for me. But whenever I see a fair value gap, what I always see is that there must be a reaction. Like, oh, market is coming inside it, market must react into it. It's not like market should give me some kind of structure, something like that. What I'm just trying to say is that, oh, market should just like react inside it and that's all. So I'm not trying to look for kind of structures. So let's check one out, and I think today is just for introductions. So what qualifies a fair value gap? We are going to talk about it and examples. So let me just open you up to something. Okay, this is good. 1 hour charts. I just want to show you an example. You can see an example here also. Like this is not actually what I want to show you, but let's work with this also because I think this is a good example here. Okay. This is a good example. Let me just try okay, now if you see this now, let's say we put this inside of it now. So you can see what I just want to explain is not for you to see how market is being traded into it. I just want you to see an example like fair value gap is real. Like you can see now we have one, two, three candlesticks. It's kind of more of three candlesticks. So you can see one, two, three market traded bullish here, then the bearish. Then at this particular price level, there was nothing traded. So that's why market come back, traded into it. Then what? You can see the whole reversing point, so which means that they have to trade it into a place where market order has not been balanced. I hope you understand. So which means that there is no balancing of market order inside that particular price level. So that is just a little ideas about it. Like that is just a little ideas about it. So I hope you can see this now. So that's like the ideas about it. So okay, let me show you um the one I caught live. So the next episode we'll be talking about more on. Okay, so I caught this one live. It was a live this thing, the fair value gap here. So I hope you can see this. This let me zoom out for you so you can see it very well. So I hope you can see this now. You can see the gap that is there. Market only traded bullish with a long candlestick 1, 2, 3, and there is no order being proclaimed inside here. So that was I was waiting for market to come back there and enter into it. So you can see it here. Let me show you on my Telegram channel. So you can see it here. I was looking at the you can see the old chart. This is the chart here. I was looking at the 1 hour fair value gap. I was telling you that I was pointing it out for people to look that oh market is going to react. The market is going to be a buyer inside this fair value gap. Don't forget, I said there are still more things you have to look with the fair value gap, but I just want to tell you the concept. Today is just introduction to it actually. So you can see what happens there. Market enter into it, then bullish. That's almost 300 pairs, 400 pairs. You can see this is here also. So like this, let me show you the pairs. I'm just trying to let you know the possibility that you can have in fair value gap. So things like that, you know it yourself. That's I see it at 370 pairs. So if you know the possibility, you can see that it really works. And next, stay tuned. Next episode we're talking about um what qualifies it, how to trade it, the pattern, how to mend it with a strategy, then to trade it. So this series is going to be fun. And don't forget our last series or the series we are still working on, the institutional market structure. Don't forget to watch more and to trade it. Give me a comment if it is working on your side or how are you seeing it? Are you seeing it at all? What do you want me to talk about it? So thank you very much. Don't forget to like, share, and subscribe. Thank you.